Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak podcast, available every morning on Apple, Spotify or wherever you listen. It's Wednesday, the 20th of March here in London. I'm Caroline Hepker. Coming up today, blowing up, the S&P touches a new record as traders question if artificial intelligence is becoming a bubble. Joining the dots, Wall Street eyes the Fed's rate forecast for clues on cuts to come. And supersized, JP Morgan Chase lifts its dividend by 9.5% in the wake of a record annual profit. Let's start with a roundup of our top stories. The Federal Reserve left interest rates on hold but reiterated its outlook for 3 25 basis point rate cuts this year, sending bonds and stocks to fresh records. The unanimous fifth straight pause had reporters asking Chair Jerome Powell when cuts are coming. He says that US inflation is on a bumpy road.
The January number, which was very high, the January CPI and PCE numbers were quite high. There's reason to think that there could be seasonal effects there. But nonetheless, we don't want to be completely dismissive of it. The February number was higher than expectations. I take the two of them together, and I think they haven't really changed the overall story, which is that of inflation moving down gradually on a sometimes bumpy road.
Despite Powell's caution on when the first rate cut could come, the forecast is for 3 rate cuts this year, and that buoyed markets. The benchmark MSCI Asia Pacific Index enjoyed its best day in more than 4 months, while a Bloomberg gauge of commodity prices rose to its highest level this year. Now, the Bank of England is expected to follow the Fed and keep rates on hold later today. The question for investors is when the central bank plans to reduce rates from their 16-year high. Recent price and wage data has shown inflationary pressures easing in the UK, with CPI sliding to 3.4% in February. Sterling is the best performing G10 currency against the US dollar this year, on bets that the Bank of England would hold rates higher for longer than its peers. In corporate news, Barclays is making deep cuts to its deal-making, trading and research departments. The changes are part of a years-long effort to improve returns. Bloomberg's Tiwa Adebayo has the details.
In recent months, Wall Street giants from JP Morgan to Citigroup have responded to a global deal drought with a slew of job cuts. But at Barclays, the changes are strategic. Hundreds are set to lose their jobs as the lender eyes bigger profits for its investment bank division. The firm has been under fire from investors questioning the high running costs of its Wall Street operations for some time, especially as other divisions routinely outperform it. Now, CEO C.S. Venkatakrishnan is seeking to put those queries to rest by streamlining his workforce and bolstering the company's advisory and equity underwriting offerings. In London, Tiwa Adebayo, Bloomberg Radio.
Leo Varadkar has stepped down as Ireland's Prime Minister. The Leaders' Coalition government recently suffered 2 heavy defeats in referendum campaigns to change constitutional language on women and the family. Varadkar gave his reasons for leaving as personal and political.
I've had the honour of helping to lead Ireland from unemployment to full employment, from a budget deficit to budget surplus, from austerity to prosperity, through Brexit, when we prevented a hard border between North and South and protected our place in Europe.
Leo Varadkar will remain as Taoiseach until his successor is chosen, but his resignation as leader of the Fine Gael party is effective immediately, with Ministers Pascal Donohoe and Simon Coveney seen as possible successors. The sudden resignation of Varadkar leaves Ireland at a crossroads. Now, to Reddit, executives and other shareholders there raised $748 million in the pricing of its initial public offering. According to a statement confirming Bloomberg reporting, the platform sold 22 million shares at $34 each, putting the price at the top of the marketed range. Bloomberg's Ed Ludlow says that the company's IPO has been hotly anticipated.
People are looking forward to a Reddit listing. It's been a long time coming, right? This is one of the kind of OG Silicon Valley tech companies. It was one of the original Y Combinator incubated startups, founded 2005. So it's an almost 20-year path to the public markets.
Bloomberg's tech reporter Ed Ludlow speaking there. Well, despite the pricing, Reddit's fully diluted valuation is $6.4 billion. That's down from a $10 billion funding round in 2021 when the company first launched plans to go public. Reddit is yet to achieve profitability. Now, in just a moment, we're going to look at the Fed decision. Our economics columnist Daniel Moss will be joining me to talk about that and its effect on global markets. But first, Sam Bankman-Fried is being sentenced next week, and there is a really fascinating battle over exactly how long he's going to spend in prison. It is quite something, and Bloomberg's reporter Rachel Graff has been writing about it. So remember, the jury in Manhattan convicted Bankman-Fried in November of 7 charges, including wire fraud and conspiracy, all to do with the collapse of FTX and Alameda. Well, the prosecutors want 40 to 50 years in jail for the FTX co-founder. They talk about his historic crimes involving more than a million victims, and the language is quite punchy. They talk about him having shown unmatched greed and hubris of megalomania, and Bankman-Fried refusing to admit that he's done something wrong. In defence now, Sam Bankman-Fried says that the US prosecutors' proposals to put him in jail for 50 years are distorting reality and that they're trying to paint him as a depraved supervillain. So you get the flavour of the sort of language that's being used, and the actual sentencing is going to take place on the 28th of March. So it's something that caught my attention. Perhaps it will catch yours. Have a read of Bloomberg's Rachel Graff and her piece on this extraordinary battle now about exactly how long he's going to spend in a US prison. Now, to the Federal Reserve. It maintained its outlook for 3 rate cuts this year, suggesting that it isn't alarmed about a recent uptick in inflation. But nearly half of Fed officials did prefer 2 or fewer rate reductions in 2024. So it's quite a split on the MPC. Let's bring in Bloomberg's economics columnist. This is Daniel Moss, who joins me now. Dan, great to have you on the programme. How big then is the concern about US inflation? Is it just a bumpy descent, as Jay Powell was talking about?
Yeah, there's concern there, but it's not alarm. So let's look at where we've been over the past couple of years. PCE, the inflation gauge that the 2% target is based upon, was well above 7% in 2022. The monthly CPI number published by the Labor Department was well over 9%. You know, we've come down significantly from these levels. And Jay Powell acknowledged in his opening statement, which is the, more or less unscripted part of his press conference, policy is restrictive and it is constraining both growth and inflation. So, sure, they've taken note of some of these numbers in the past couple of months, which have been a little bit higher than anticipated. But it's not enough to fundamentally derail the story, which is that inflation is retreating. You can use bumpy or another term, but the trend is there. And they project cuts in interest rates sometime this year. So look, when Powell first started talking like this in December, markets got extremely excited. And that was where March came from. But no Fed official came close to endorsing March. So there's been this sense of letdown. Now there's relief that these numbers, quote-unquote bumpy, haven't derailed the fundamental picture. This was never going to be a year of massive 2020, 2008 style rate cuts. Okay? That scenario just wasn't plausible. You can have a couple of rate cuts and policy can still be restrictive. And that's where they want to go.
OK, so the market's got it all wrong. They're getting it more right now. I mean, the rally that we've seen off the back of this is very significant.
Well, I wouldn't say they had it all wrong. I would say perhaps, emphasis in a couple of places of the narrative could have been different. That's almost central banker speak, isn't it?
It is. It made me pause, Daniel. In terms of then the balance sheet, that was the other issue, isn't it? How quickly the central bank deals with the balance sheet, how it deals with the balance sheet.
Yeah, well, again, this is consistent with the idea that they want to make policy a little less restrictive through the course of this year. And if you zoom out, we also heard from Christine Lagarde in the past 24 hours. There's not a central bank of consequence that's talking seriously about more hikes. Let's put it that way. We're either talking about the timetable for reductions, or you're if the new Reserve Bank of Australia governor is saying, well, we're not ruling anything in and we're not ruling anything out. How's that for going out on a limb? But, interest rates have peaked in any place that really matters, okay? They're going down this year. It's a question of how far down they go and how quickly. And yeah, sure, they prefer, inflation be a lot closer to averaging 2% over time. But look where we've been. Policy is well into restrictive territory now. So by definition, you can make a couple of cuts and still be somewhat restrictive.
Yeah, exactly. Daniel, thank you so much for being with us. Bloomberg's economics columnist Daniel Moss then. So just giving us, the trajectory, I think, putting into perspective how far we've come in this year where we're talking about the path for rate cuts and little else besides. Daniel, thank you so much for being with me. Now, let's turn our attention to another of our stories this morning. So this is Fidelity International. It's recently changed CEOs and announced that it is cutting around 1,000 of its staff. These changes at the firm reveal the power of its chair and one of the more powerful women in finance. This is Abigail Johnson. Our asset management reporter, Lucia Giftopoulos, joins me now to discuss this. I mean, this is Fidelity International. This is a US funding giant, isn't it? What's happened recently in terms of Fidelity International?
So Fidelity International is actually separate to the US giant. They set it up in 1969 and then they spun it out. But the Johnson family, which is a very powerful billionaire family, still owns a very significant part of it. So, yes, at the end of last year, Ann Richards, who was CEO, stepped down a bit unexpectedly. People were quite surprised because she's very well respected. New CEO is now called President, who's been there for a few years. Started earlier this month, and then a few days later they announced they're cutting 1,000 jobs, which is about 9% of the staff, 1 out of 10 employees. And this is surprising to the city and to many in the industry because Fidelity is a privately owned company. It doesn't really give a lot of information about itself. And nearly 10% of staff is quite a big number to call.
So what do you think that the changes mean then in that sense?
I think, with Abby Johnson, we don't really, this side of the Atlantic, connect her so much to Fidelity International, but she's the chair and her family is said to own about 40% of the company. So, speaking to people and out of the reporting, what has come out is that she's actually quite involved. People are whispering that she wasn't very happy with how things were going, potentially. It's very hard to know exactly how things are going, but with the available data, we can see there have been heavy outflows from many of the funds, and that the cost, at least for the UK regulated entities, has risen a lot and the profits have dropped. So there will be changes there. Asset management is challenged in general. This has been a bit of a surprise because we don't really, it's just come out of the blue. We don't really know what's happening there. They don't have to file quarterly statements to tell us.
And what does it mean in terms of the UK business then, do you think?
So I think the UK business will be particularly affected in terms of the layoffs because it does employ about 1/3 of the staff, if not more. We had a story coming out of China earlier this week, actually, which said that they're cutting 20 or so roles in China and in Hong Kong, where they employ about 2,000 people in China and Hong Kong. So, you can imagine what will happen in the rest of the world. And I think London is one of the places where we understand that they had hired a lot over the last few years. So it's quite possible that there will be a big kind of clear out in some departments.
What about Abigail Johnson, what it means for Boston? Because she seems to be better known and has done more business there, perhaps?
So the Fidelity in Boston is a fund giant. They manage 4.9 trillion in discretionary assets, and they've been quite forward-looking with digital assets, venture capital. That hasn't happened so much this side of the Atlantic. So I think it's fair to wonder if they're going to try and bring some of that, implement some of that over here, where they've pushed in private assets lately, but it doesn't quite have that clout as the business does over there in the US.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.